Payroll Solutions, and today I wanted to share some information with small business owners about a new COVID-19 payroll tax credit. It's available to businesses who have been financially impacted by the COVID-19 pandemic and who have been unable or chose not to obtain a PPP loan. So both the PPP loan and the employee retention credit were created with the CARES Act back in March with the purpose of encouraging employers to continue paying their employees throughout the pandemic. However, because both of the programs are government funded, if you received a PPP loan, you are not eligible to claim the employee retention credit. In order for your business to claim the employee retention credit, you must be paying your employees throughout the pandemic, and you must experience either a 50% or more decline in gross receipts compared to 2019, or you must have been forced to close your business due to a government order related to COVID-19. Eligible businesses can claim up to $5,000 per employee on qualifying wages and healthcare expenses that you pay to your employees from March 13, 2020 through December 31, 2020. Your business can immediately begin claiming the employee retention credit by reducing the payroll taxes that you would otherwise send to the IRS. So this can be a quick way to assist businesses who are having cash flow issues right now. And if the tax deposit ends up being less than the employee retention credit, the IRS will send you a refund for the difference. So if you have a payroll tax deposit of $10,000 that's due, however, you're claiming a $5,000 employee retention credit, you can reduce the $10,000 payroll deposit by the $5,000 credit, and you would only have to send $5,000 into the IRS. Let's look at some examples of when your business would be considered partially shut down and when you might be eligible to claim the employee retention credit. Your business could be eligible if you live in an area where there is or was a local, state, or federal government order that limits commerce, travel, and group meetings due to COVID-19. The order must prevent you from doing business comparable to how you operated prior to the shutdown. Examples of government orders that may force your business to close include a shelter-in-place order that requires all non-essential residents to stay at home, an order for all non-essential businesses to close, or a curfew that limits your business's hours of operation. You can be eligible even if your business is only forced to partially suspend operations. Two examples would be a restaurant who must stop indoor dining but who can remain open for carryout, or a business who is able to have employees work from home but who cannot access the same equipment or resources as it could if its physical workplace were open. You can only claim the credit during the period of the government order. If you voluntarily close your business, you are not considered to have suspended operations. If you don't qualify because your business wasn't forced to close, you can qualify if you experienced a 50% or more decline in gross receipts compared to 2019. When determining if you've had a 50% or more decline in gross receipts, most businesses will compare their books to the same quarter in 2019. If you started your business in 2019 or 2020, you should visit the IRS's website, which I'll provide a link for later on, to determine how to compare your gross receipts. You can claim the credit until you exceed 80% of your gross receipts compared to 2019 or until January 1st, 2021 when the credit expires. In this IRS example, an employer experiences a 52% decline in gross receipts in the first quarter of 2020 compared to the first quarter of 2019. It experiences a 17% decline in the second quarter of 2020 compared to the second quarter of 2019, which means the company's gross receipts were more than 80% of last year's receipts. Because you must stop claiming the credit beginning with the first quarter, following the quarter in which your receipts were 80% of last year's sales, this employer can claim the employee retention credit in quarter 1 and quarter 2, but must stop claiming the credit in quarter 3. The employer does not need to prove that any significant decrease in gross receipts is related to COVID-19, but it would be a good practice to keep financial records for 4 to 6 years in the event of an audit. In the event you discover after 2020 that you're eligible to claim the ERC, you can file an amended return with the IRS to claim the credit. So this is a very high-level overview of the employee retention credit. So I encourage all small business owners to reach out to your payroll or your tax or your legal professional to determine whether or not you qualify for this credit. And I'll post some links to the IRS if you want to dive deeper into the details of the ERC. And then I'll also post my contact information. So if you have any follow-up questions, please don't hesitate to reach out to me. Thanks so much for watching.